Hey guys, it's your boy Alan FX back again with another episode. So yeah, there's another video in the Forex Made Easy trading course. In our previous video, we talked about the reasons why different people trade. So I'm going to tag the video. You can go check it out if you want to understand the reasons why different people trade, the reason why I specifically trade. So yeah, but in this video we'll be talking about something a bit different. We'll be talking about who exactly participates in this forex market. So yeah, rather than just me and you, the forex market is made up of different participants, from simple people, from simple individuals like you and me, to huge institutions, to banks and many other unique players. So yeah, in this video we'll be talking about that. We'll be talking about these major players, these other participants in the forex market. So yeah, and another thing, you need to understand that each of these different participants play a unique role. They don't just participate in this industry just like you and me to make profits. They participate in this industry for different unique reasons. So yeah, to begin with, and first of all, to begin with, so the most obvious participant of all are retail traders. But who exactly are these retail traders? Retail traders are basically individuals like you and me who simply trade forex via different platforms and using brokers such as XNS, Deriv, and many other brokers. We simply trade using platforms such as meta traders. So yeah, you and me are considered as retail traders. So yeah, our main goal in trading forex is simply to make a profit. Let's say if you believe the price will go up, we buy, we make a profit. If you believe the price will go down, we sell, we make a profit. So yes, our main goal of participating in this forex industry is simply to make a profit. And we can see that in the past years, there's been a huge there's been a huge increase in the amount of individuals trading forex. It's actually the same when it comes to here in Malawi. You can see that in the past couple of years, due to the introduction and increase in the high use of internet, different individuals, different people have ventured into the forex industry. So yes, one of the most obvious and the first participant, the smallest participant in the forex market are retail traders. So moving to the next participant, uh, are what we call central banks. But wow, what are these central banks? So yeah, rather than you and me as retail traders who simply trade the forex market to simply make a profit, to simply make money, these central banks trade for a different reason. These central banks entirely venture into this forex industry, entirely get involved in this industry to manage their economies. So yes, central banks are government-controlled institutions responsible for managing a country's monetary policy and many other things. So as I've said, these central banks entirely get involved in the forex market simply to manage their economies, to manage their currency, to manage their exchange rates, and stabilize the economy and many more. But how exactly do they manage their currency? They do this by using what you call monetary policy. They use these monetary policy processes to control the money supply, to adjust interest rates, and deal with different economic issues such as inflation. And in other cases, the central banks can either buy or sell in large amounts to stabilize their economy, to stabilize their currency. So yes, and some of the most notable examples of central banks in the world may include the Federal Reserve in the United States. You have the European Central Bank, the Bank of Japan, and the Bank of England. And these are some of the examples of the major central banks. Moving on to the next one, another huge participant in the forex industry are what we call commercial banks, or what, in other terms, market middlemen. But what exactly are these commercial But what exactly are these commercial banks? Commercial banks are basically large institutions that facilitate most of the Forex transactions in the interbank market. The interbank is a network of different banks and how they interact with each other. In all these processes, whatever happens within this interbank system helps in moving different currencies in the world. But what are the roles? Why exactly are these commercial banks involved in the Forex market? The first thing is that these commercial banks can help broker big trades for different clients in a way that they can help execute massive transfers for an international investor or a corporation, and uh, and they make money through fees and the spread. Some of the examples of these commercial banks may be the J.P. Morgan Chase. That we have the Barclays Bank, we have the Standard Bank, and another thing is that these commercial banks they can also help different companies with global currency exchange, enabling smooth international trade by helping importers and exporters pay different suppliers. For instance, let's say you are an importer and you need to pay a supplier in China. You can use the bank to facilitate the currency exchange, and these banks simply make money by using fees and spread. An example might be, let's say the Barclays Bank wants to execute a currency trade. It might buy euros at this specific price and sell it at this specific price, aiming a small spread. A spread is the difference between the buying and the selling price. And since these banks executes millions and millions of trades, these small trades over millions and millions of trades accumulate into huger and bigger profits. So moving on to the next participant in the market, in the Forex market, we have what we call corporations, different companies, these large multinational corporation. And in this example, I'll be specifically using Apple, since it's a well-known company most people will be familiar with. So yes, how exactly do these large corporations get involved in the Forex market? These large corporations do business across different borders. An example might be, let's say the company Apple can be selling their products in the European markets, but once they sell their products in the European markets, they might want to lock in the profits to safeguard it from unpredictable fluctuations in the exchange rate. They may use different financial tools such as forwards, futures, and options to reduce the risk of losing money when different exchange rates move against them. As of now, I know these forwards, futures, and options sound advanced or whatsoever, but then over time, I'll explain exactly what they are and you understand it. In future videos, I explain exactly what each and of these are, what futures are, what forwards are. But as of now, just know that these are financial tools these corporations can use to safeguard themselves from price fluctuation risks. So yeah, as I've said, these corporations conduct these currency exchanges regularly. They can exchange currency to pay their suppliers, to receive payments, and many more. So as these companies do this, they're involved in this forex market. And another another unique player in this forex industry are what we call hedge funds and investment firms, also considered as institutional traders. If you're not familiar with these hedge funds, in this video I'll just give you a basic description of what these are, but over time I'll do a special video on exactly these hedge funds so that you would understand deeply on exactly what these hedge funds are and how they work. So, to put it simple, these hedge funds are basically these are large professional money managers that use forex to generate returns or hedge portfolios. They manage billions of dollars and often have different access to the interbank market. As I've said, the interbank market is a network of different banks and many more institutions. So yeah, what you can know right now is that these hedge funds they have access to millions and millions of dollars. They have access to huge capital and they use advanced tools generate more money and even safeguard money. And one thing you can note is that these institutional traders, these hedge funds, they execute large trades that have the potential to impact currency prices and market trends across global markets. So yeah, as of now, this is you can understand about hedge funds. But as we go, I'll explain even more. I'll explain even deeper on why these hedge funds are necessary. Why it's important for you to understand them and many more. To put it in simpler terms, some of the major key players in this forex industry may include you and me, which are known as retail traders, at the central banks we've talked about, We say that these don't simply trade to make profits; they trade to manage the economies. And some examples of now these central banks include, we have the Federal Reserve, the European Bank, the Bank of Japan, and many more. And also talked about commercial banks. We've talked about these are the banks people use to facilitate different transactions. And yeah, an example would be the Standard Bank, the Barclays Bank, of the JP Morgan. And another another example of these large corporations, an example may be Apple, the company Apple, or no, they trade to protect international business profits. So yes, and the last participant is the hedge funds. So as of this video, that's what I had for you guys. So you can click, you can like, and comment. If you wanna get in touch with me, if you want to join our community, you can text me. This is my IG handle. You can text me. You can check out my content on Twitter, and I also post like short videos on TikTok. You can check out all the pages. We also have like a Telegram channel where we talk about Forex. The link is down in the description. So hit the subscribe button and like this video. Peace.